survey of over 1,000 Americans, we actually have the worst pessimism about the economy ever. We need to talk about that. We need to think about what that means to us. We can take a look at more earnings. We are in earnings season. We can talk about Apple, their news about becoming a bank. Is it actually, step back, they're not becoming a bank. They are leveraging a relationship with Goldman Sachs, but they are offering savings accounts. Is that a big nothing burger, or will it change the game for regional banks? We'll talk about something from Liz on Saunders as well. So let's get into the news, folks. Let's start with something that is the worst ever. Yes, CNBC did a survey of 1,000 Americans, and it is the worst pessimism on the economy ever. It hit a total of 69%. 69%. Worst ever. This survey goes back nearly 2 decades. So as someone who likes to be a contrarian investor, someone who spoke to you last November about buying homes when everybody said it was a bad idea, I have to ask myself, what does this mean? Is this the most predicted recession ever? I am one of those. Is this a sign that, hey, we go into a recession, but it's shallow and short? I don't know. But anytime the public, in this case 69%, are all on one side, I personally get nervous. I personally ask myself, what am I missing? Again, the stock market, as you have undoubtedly heard from many of our experts, is a forward-looking indicator. So, for example, maybe we do have 6 months of pain. Maybe we do have confirmation of an earnings recession where earnings are down 2 quarters in a row. But maybe, come Q4, we are back to it. So I don't know. It is shocking. I get nervous. I just do. Everybody becomes a syndicator. I get nervous. Everybody wants to Airbnb. I get nervous. Everybody does this. I just generally get nervous. I don't like to be in a crowd of other investors. That has not served me well over the years. In addition to 69% of Americans being pessimistic, 2/3, so let's call that 66%, think we are either in or heading to a recession. And only 24% think it is a good time to buy stocks. Again, said another way, 76% of us think it is a bad time to buy stocks. So again, these are just things that I think about when everybody is one way. I generally speaking look to do, frankly, the complete opposite. So thought I would share that with you. Let's talk about some earnings. We got some more. We got some big bank earnings. We got Bank of America, kind of like all the other big banks. They beat top line, beat bottom line. Again, they made a huge profit on what's called net interest margin. Basically, they pay you 0.01 and then they lend it out. Maybe they lend it to the Fed. Maybe they do this. But again, net interest margin is basically doing nothing, and they are printing money. Goldman Sachs actually took a significant write-down. They took a $470 million hit to revenue. If you don't remember, in Q1, Goldman Sachs announced that they are exiting their consumer loan business. So they sold off parts of that, and they had to write down $470 million. So they missed revenue, but they hit the bottom line, or they beat the bottom line, I should say. And then finally, J&J, Johnson & Johnson. Beat top line, beat bottom line, saw strengths across all 3 business lines. Folks, as we get into the later parts of this week and into next week, we will start getting to those kind of mid-tier companies where earnings will be much more interesting. We'll get some retail numbers and the like. But so far, again, it's very, very much big bank dominant to this point. Earnings aren't horrible, I think would be a fair assessment. Let's talk about Apple, and I love the interaction from One Rental at a Time community. You guys are all amazing. So I put out a video yesterday with Taylor from Great, why am I forgetting the name? Great Life Investment. Anyways, I forget the name. But anyways, lots of you replied, Michael, this is no big deal. I'm getting 4.4, 4, whatever. You guys are awesome. Just awesome. According to Bankrate, Apple at 4.15% comes in 11th place. So again, this is according to Bankrate. There are 10 institutions offering a higher savings rate. So again, 4.15's not horrible, certainly better than the big bank. But this is why all of you are awesome. Right here, this next stat. Take a wild guess, just a wild guess. What percent of folks who have savings accounts are earning more than 3%? 3, that much. I think the number will shock you. If I look at your feedback from yesterday, I would think 80% of people are earning more than 4%, let alone 3%, because again, you guys did a great job yesterday. According to Bankrate, now this may change because this is always a month back, only 22% of folks with savings accounts, this is not money market, this is not CDs, this is not treasuries, savings account. Only 22% are earning more than 3%. Said another way, 78% of savers are earning less than 3%. This is why I think Apple's announcement is game changer. I am happy that most of my viewers are earning 4.5. That is amazing. But we make up 22% of the population. There are 78% of folks out there earning less than 3. Some portion of them trust Apple. Some don't, obviously, but some do. So we are going to know probably in a month, maybe 2 months, has Apple garnered 10 billion, 25 billion, 50 billion in savings? And why this is interesting, why I think it is a big deal, is that money comes from somewhere. If you're moving money to Apple, it comes out of somewhere else. So, is it coming out of the big banks, which frankly deserve it? You heard Taylor talk yesterday. Big banks are paying 0.01, not 0.1, 0.01. So, is Apple going to garner big deposits from JP Morgan, Wells Fargo, B of A? Is Apple going to get money from credit unions and regional banks? I don't know, but we will know soon. Some of you think this is a nothing burger. I tend to doubt that. If 78% of folks truly are earning less than 3% according to Bankrate, I think this is interesting. And again, that money has to come out of somewhere. So we'll see what happens with Apple. Talk about housing starts. I think tomorrow is pending home sales. Again, my guess, I'm looking at my board, is 4.37. Expectations are 4.5. But today we got building permits. Building permits, if you look at the top line number, we're down. But remember, building permits have multifamily and single family, so the total was down month on month. However, if you break it down to single family, which is probably what you and I care about, single family building is up 2.7%. A annualized run rate of 861,000 units. That is down 27% year on year, but again, up from last month. This again is probably a sign that the builders realize that they are in the catbird seat. What have we been talking about on this channel? New listings down, inventory down, the market's bifurcated. It's hot at the bottom, it's frozen at the top. Builders can manipulate payments by buying down rates, whether it's buying down to 5.5 or 4.99 or doing a 3-2-1 buy down, whatever it is. Builders have the flexibility to do things other than adjust price. They can adjust payment. So again, I think builders are doing great. I think it was yesterday we talked about builders have gone from 11% of the market to almost 30%. And I suspect that will grow going forward. So again, housing starts. I saw something from Liz Ann Saunders. I follow her on Twitter. She is a wonderful follow on Twitter, Liz Ann Saunders. She published some stats from a survey from Credit Karma. So you can find the tweet. Here they are. And I want to know which of these four are most shocking to you. 4 stats. I want to know which one shocks you. 1, 51% of those surveyed by Credit Karma do not know how to correctly calculate net worth. 2, 31% of all respondents have a net worth of 0 or negative. 30% of respondents, again, this is a Credit Karma survey, care more about a celebrity's net worth than their own. And then finally, and I will just tell you right here, right now, this is the one that is most shocking to me. 21%, 1 in 5, 59-year-olds or older, 59 or older, have a net worth of 0 or negative. So again, folks, 51% don't know how to calculate net worth. 31% of total respondents have a negative net worth or 0. 30% care about a celebrity's net worth more than their own. What are you doing? And then finally, 21% of folks 59 and older have a negative net worth. I think those are sad, sad statements. So credit crunch. So again, the credit crunch is right in front of us. It's basically people withdraw deposits. Banks tighten lending. Lending hurts companies, builders, all of these things. It is going to impact the economy, and according to Mike Wilson from Morgan Stanley's Chief Investment Officer, there has been 1 trillion, this is Mike Wilson's number from Morgan Stanley, $1 trillion of deposits have been withdrawn from banks. Think about that. 1 trillion. That's a big number. 1 trillion deposits have been left in bank. Banks are going to be forced to stop lending, tighten credit. You've already heard Janet Yellen over the weekend say, hey, Fed, please, please don't do any more. Banks are tightening credit. It's going to crush the economy. This will impact the economy and potentially cause a recession. And again, I think the Fed meeting on May 3rd is horrible timing. We will not get any true economic stats until the middle of May that show how abrupt and deep the banking crisis caused the economy to contract. We are a consumer-driven economy. As we talked up front, the worst ever. The consumer, you and me, according to a CNBC survey of over 1,000 people, 69% think we are headed the most pessimistic about the economy. Folks, I do have some good news for you. As you know, I am a part of a Fresno event on May 13th. That is Saturday, May 13th. I'll put the link below. A lot of big speakers. I will be there talking, obviously. But we've negotiated, or we talked about getting a discount. You can go ahead and use the discount code SALE49. The tickets will only be $49. If you are one of the several hundred that have already bought the ticket at $97, congratulations, you can bring a friend. This was very important. I said, I'm not going to be a part of this if we can't get more folks there. So again, if you want to come to this event, it's an 8-hour event, lots of speakers. I'll put the link, check them out. Now it's less than $50. Come see me in Fresno, my stomping ground. Sale $49. And if you've already bought your tickets at $97, you can bring a friend. So I hope you enjoy that. And then lastly, don't forget about the amazing event this Sunday. A lot of you did not realize the power that came last Sunday with the Legends of Real Estate Investing. It did not sell out. It did not sell out, and you missed it. Everybody who was there, you can look at the comments from yesterday, exceeded expectations, all of this great stuff. Don't miss out again. You're going to get to talk to real estate agents and real estate investors who are making it happen. Beth Traverso, our Tuesday guest, is going to talk about how to get attention of an agent. Jason has gone from a W-2 tech job to becoming a wholesaler, flipper, and now broker and agent. And then, of course, Ty, who's been doing this longer than me. You want to be in the room. You want to be able to ask them questions. No PowerPoint. No PowerPoint. We will go with your questions. So again, come join. I'll see you Sunday morning. $47, I think. Anyways, take care. Have fun. Like, subscribe, comment. Can you imagine those stats from Liz Allen Saunders? Crazy. And hopefully I'll see you in Fresno. If you do come to Fresno, bring your book. I will autograph it. We'll take some pictures. Have some fun.